What's going on, you guys? Welcome back to another video. My name's Nathan Hartley, and today I want to share with you guys my dividend portfolio. I hope you guys enjoy. Now, for those of you who don't know what dividends are stocks that pay you monthly or quarterly just for owning them. Let me give you an example. Apple, ticker symbol AAPL, pays each one of its shareholders $3.08 per year just for holding that stock. And Apple pays on a quarterly or every 3-month basis. So one of my strategies, along with my growth portfolios, which I'll link in the description below, is to move money from those growth portfolios over to my dividend portfolio once I obtained a substantial return from those growth stocks. Doesn't matter when I do it, but I'm trying to keep those stocks to 1 to 5 years as a long-term investment. So once again, once they mature in my growth portfolios, I will go ahead and move them from those two growth portfolios and I'll move them into my dividend portfolio. And this one will pay me good, steady returns as long as nothing happens in the market. Now, in dividend stocks can cut their dividend at any time. It's up to the company's discretion whenever they're in dire straits financially, or if they want to reinvest their money back into the company to innovate their company and take them to the next level. Those are all reasons why they might cut their dividend. But I choose to try to invest in companies that have a steady dividend and have room for growth of that dividend over time, so the money that they pay me will steadily grow. And in grow, I mean I want those sweet, consistent returns. So let's just quickly hop into my dividend portfolio and show you what kind of stocks I have. So starting out today with my dividend portfolio, I have $2,264.89. Today, I'm only up 1%, about $30.50. So when it comes to my dividend portfolio, I've also started increasing my positions in some growth dividend-like portfolios because everyone knows I really can't get rid of my growth portfolio. So I'm trying to incorporate it into this as much as I can. Now, some of the dividends in my portfolio have actually cut their dividends, and I'm still keeping these in there because I really think in the next couple years, once profitability has been brought back, then they'll bring back the dividends as well. Starting out with Carnival Cruise Lines, they're at about 19.7% of my portfolio, and I own a total of 32 shares at an average share price of $21.12. And with this stock, I'm going to keep averaging down my position and continue buying into that. My next stock is Wynn Resorts. Wynn Resorts is to almost 5 shares, and Wynn Resorts, once they open up their China hotel, and once they open up more of their infrastructure like in Vegas and the Boston property, that revenue will start to run back in, and they have a healthy dividend as well. I also have Apple. Apple, I only own about 1 share, and Apple, I believe, is really going to take off in the next couple years, probably say 2022, 2023, whenever they come out with the Apple glasses, and then they're also coming out with a VR competitor. So Apple has really great quality, and with the Apple glasses, kind of like the Apple Watch, the Apple earbuds, there's a lot of room for progression, as well as them moving into the services industry, which is a really good thing for them. I also have some Iron Mountain, which is a heavy dividend player, and Iron Mountain is a data storage and data protection agency. So with everyone's data that people are collecting, big companies store that data in places like Iron Mountain. I currently own 9 shares of them. On with Disney. I feel like Disney, you're going to have theme parks, and between Busch Gardens and Six Flags and things like that, Disney is a safe bet, as well as them getting into the whole digital realm of entertainment, and I almost have 1 share of them as well. Now, I do have a couple of Vanguard accounts. Those are just ETFs that invest in a bunch of different areas of the market. I also have a little bit of Microsoft. I think Microsoft is peaking out with growth. Now, with this whole pandemic that's going on, I feel like they're getting a little pop of their growth because people are settling for services that maybe aren't quite up to par with the ones that they would purchase. But Microsoft incorporates a whole circle of different services that will meet all those objectives at a cheaper price. I only have 1/2 share with them, but looking to invest more in the future. Dave & Buster's was one of my growth dividend stocks that I recently started acquiring, and I believe Dave & Buster's, a couple years after this whole thing happens, will bring their dividends back, and that's a high cash flow scenario because I bought them at such a cheap rate. If they bring their dividends back, I'll be getting nice returns off them. I have 6.2 shares of them. Also, IBM getting those government contracts, and Intel. These two companies have tech companies, so they have good balance sheets. They're generating decent revenue, and I feel like tech is the way to go in the days to come. Intel, I have 1 share, still investing more in that. And then I have Royal Caribbean, which I also invested in because I wanted more exposure to those companies that are taking a real beating from this whole pandemic that's going on. That being Carnival Cruise Lines, Wynn Resorts. I also have Southwest Airlines, but I bought them. I have 1.5 shares about, and so I'm going to continue to buy more of them as the price goes down. Nvidia, with all the self-driving cars, with all the technology, with all the stuff that's going on, Nvidia has a real shot to become a very, very, very lucrative company. So because they have such a small dividend and because it is going to be increased over time based off their earnings and what their board of directors decides, I think it's got a tremendous amount of potential. And I have another Vanguard. Vanguard is a very, very good, well-known, low expense ETFs that you can invest in to have a broad ownership of the market. I have Southwest Airlines, which was going to give me exposure to the airline industry, and they have the best balance sheet between all the airlines. Now, I am looking to buy more of this, but I've got it a very small position in my portfolio because airlines are going to be slow to come back with travel and tourism. I also have Leidos Holdings, which is a technology infrastructure. They have great gains. I don't believe I have 1 share. I have a little bit of a share, but I'm biting off little chunks where I can. And last but not least, Hilton Worldwide. I currently love Hilton. I love all their properties. This is a stock that I stay in on a regular basis. I have 1/4 of a share, and they have a decent balance sheet, not too great of returns, but I think this is a company that is going to bypass all luxury brand hotels, and not just in the United States, but around the world. They're growing their market share. Well, that's it for me, guys. I really appreciate you guys watching my channel. And if you guys like what you see, leave a like down below and throw a comment and tell me what kind of stocks you're investing in today's market. See you guys.